Welcome back. Paul DeBuzzo here again. This will be step one of the instructional videos for the Investment Property Analyzer tool. To give you some more frame of reference, this cash flow statement, this property analyzer, is broken down into about 5 sections. The first one being calculating effective gross income or gross rental income. The second, total operating expenses. The third, the financing, or calculating how the financing is going to break out. Okay. The fourth is knowing your down payment. And the fifth is down here, and that's basically the results or your cash flow or kind of what's going on with the property. Okay, so your total return and your cash flow statements here. So in this section, we're going to focus just on the gross rental income. So the first thing we need to know, and you would find these numbers from inquiring with the seller of the property or through the real estate salesperson that you're using to help you find an investment property. They would request the seller's pro forma or income expense document, and the seller would provide the rental prices for each unit, or they may just provide what's the gross rental income. If they do provide the rental numbers for each unit, you would input them here. Okay, and we'll get to this section in a second. So you have to assume that these numbers were provided by the seller. So we put the gross rental income here, and from the seller's number, we have 102,924. Okay, this unit consists of 12 one-bedroom units, very simple apartment building. Okay, this cash flow spreadsheet can be used on any type of building, 3 units, 6 units, 10 units, 12 units, 50 units, and anything in between. So let's continue. So here you would put in the number of units, 12, and in this section it gives you some room to put in any rental increases that are coming or are negotiated in the deal, some laundry income from the coin laundry machines, and any parking or storage income that comes with the property. Again, this would be provided by the seller. Now, if you visited the property and you notice that there's room for laundry and you want to put in coin laundry after the purchase, you could, actually insert some income here just to give you an idea of kind of what the income is going to look like in the future. But for now, we're going to use strictly the seller's numbers. So the second thing we need to do here is apply some vacancy. So vacancy is a little bit tricky in that every year your actual real vacancy could be different. Well, it is going to be different. There's really never a year when it's exactly the same. But we need to take vacancy as an average. So we use published statistics from CMHC and Statistics Canada to understand what vacancy rates are across a region like Hamilton or Kitchener or parts of Toronto. Okay, so for this building in this location, 3% as an average every year is the market vacancy rate. Now, again, next year might be a little less, the year after might be a little more. We're going to use 3% as a vacancy. So let's cover this again. Gross rental income plus some laundry income gives you a total gross income of 104,484. The spreadsheet then subtracts the vacancy and you get what's called the effective gross income. And that's where we get our 100% from. So everything below in the spreadsheet is calculated off this effective gross income number. The vacancy rate has already been subtracted. This is our 100%. Now, if on the seller's pro forma or you figure it out later down the road, during a transaction, for example, what the actual rents are, you can input it into this section of the gross income. So very simply, unit 1 through 12, you insert how many bedrooms the unit has and the actual rents. And the spreadsheet will calculate it for you and give you a number here at the bottom. Now, if you have anything less than 13 units here, you just make that 0, make this 0, And if you only had 10 units, then the spreadsheet will calculate for you again. If the building is more than 12 units, you kind of need to manipulate this spreadsheet to allow for more units. Okay, so you can bring this by highlighting and moving this down. You can start adding more and more units and change the formula to match. What you can also do is copy this whole thing, press copy, and make another one here. Okay, if you do that and that, okay, just to allow you more room to calculate more units. Anyhow, so let's change that back to 102,924. Okay. This column is important. Excuse me. If you're doing any kind of research on the property and you discovered that rents in some of the units are low, which is very typical in apartment buildings and multifamily properties, it gives you an opportunity here to input what the actual market or potential rent would be for the unit. Now, as you can see here, you have one unit renting for a little bit above market, but I still put 825. This one's 825, 825. Unit 3, well below market, almost $200. The potential rent would be 825, and that's across the board. So again, every property will be different, but this potential rent column allows you to calculate for what market rent would be if every unit was at market rent. Okay, having excuse me, some units that are below market is never the greatest thing in the world, but it does give you some ammunition to increase the rents when you take over the property and profit from the increased income. Okay, so it's not actually a bad thing. So we're using this number here in our gross income that shows the actual real rents that the building is producing. So that's it for the section that calculates gross income. If you have any questions on this, or if I haven't covered something, please feel free to shoot me an email, and I will cover anything and everything that there is to cover. Thank you very much.